Good morning, everyone. Welcome to the Business and Commerce Subcommittee. It's Tuesday, March 3rd. We appreciate everyone coming, and to the members, thank you very much for coming in a little earlier on a Tuesday than we normally would. We wanted to accommodate some local and national subject matter experts that are in town for a conference yesterday, so welcome and thank you to all of you. And before we get started this morning, Rep. Anderson, you got a prayer for us?
Yes, sir, Mr. Chairman and members. Let us pray. Heavenly Father, we are thankful for you brought us through last month, and here we are at the beginning of a new month. We say thank you. And God, as we come down to do the business of the state of South Carolina, we pray that you would be with each and every one of us. Thank you for those that are presenting the bills today. Thank you for those that have come to speak on the bills. And God, we just ask that you bless this committee. And Lord, those persons that we left behind at our houses, bless them in a special way, protect them from all harm, hurt, or danger, and bless this nation state of South Carolina. Amen.
Amen. Amen. Thank you for that. We have three bills on the agenda today. Let's jump right in on S-163, cryptocurrency. S-163 amends the South Carolina Code of Laws by adding Chapter 47 to Title 34, regulating digital currency and digital assets activities. It bans state and local governments from requiring or accepting central bank digital currency, CBDC, or participating in testing. It allows individuals and businesses to use digital currency voluntarily and ensures digital assets are not axed or regulated differently than traditional U.S. currency during those transactions. The bill prevents discriminatory zoning or tax treatment of digital currency operations, sets limits and reporting requirements for digital asset mining to protect the electrical grid, clarifies that certain mining and stalking activities do not require specific license and are not securities, and gives the Attorney General authority to prosecute fraudulent digital mining service providers. So we know this bill is actually also being heard, something similar to this in the Senate Ag Department right now this morning regarding this subject matter. We appreciate what they're doing over there. And also today we're going to hear and would appreciate everyone also continuing to address the energy needs. We've been with our Energy Reform Act that we had last year, addressing the grid. We want to make sure we're continuing to focus on anything related to our energy and also certainly our water needs as well. We've heard lots of those. So as you're testifying, if you want to specifically make sure you're addressing those issues for the committee, that would be most appreciative so we don't have to ask those questions in the end. But committee members, let's jump right in. And we got a couple folks here to testify, including one of our very own who left us to go to that upper chamber. And we're so proud of you and appreciate what you're doing. But Senator Matt Lever, welcome for being here, and we'll let you testify and lead us off, sir. I know you have a meeting and you got to get out of here.
I do. I also have a printout thank you, Mr. Chairman. I have a printout that your staff is putting together to pass out to your committee members. This bill is pretty simple. It's really just a freedom bill for cryptocurrency. It allows for individuals to use it freely. It doesn't mandate anything. It doesn't mandate it also prohibits the government from actually using it. So it's really just a free market sort of idea with appropriate guardrails and consumer protections. And importantly, which is the major question I get on this bill, is how it will affect the grid, electric grid. And this bill stipulates that it's got to be grid neutral. It cannot add to our already current electrical issues. It has fraud enforcement, with the Attorney General retains full authority to prosecute anyone fraudulently claiming to offer mining or staking services that is nefarious. So basically what we're doing is we're trying to get ahead of the emerging technology, make sure we have appropriate regulations and guardrails to protect consumers, but also offer it as freely to be used in the state, so that we can be a part of the emerging technology that's happening all over the world. But have those appropriate guardrails. And I know you have Dennis here that's going to be speaking. I'm sure he's really the expert in the field. But I'm welcome any questions, and with this bill passed the Senate 38-1, so I hope for a fully favorable out of here and get it to the floor and get her passed.
Thank you, Senator. Any questions for Senator Lieber before he exits the room stage left? Very good. Thank you. Please, Representative Williams.
Thank you. Thank you, Mr. Chairman. Thank you, Senator, for being here this morning and sharing with us. Real briefly, you mentioned the grid, and I'm just curious in reference to how this digital, you're going to have to educate me on this because I'm not too up on the cryptocurrency piece at all, but help me to understand why you said it wouldn't affect the grid.
Well, so you have the mining operations, which is you have these supercomputers that are doing these math problems in an effort to mine cryptocurrency. And if you don't have the appropriate guardrails, that can kind of get out of hand, and it will stress the electrical grid. And in the bill, when you get the printout, you'll see it also that it stipulates that the mining operations must not add stress to the grid and must provide their power purchase agreements to the PSC upon request to prove that they can curtail usage during peak stress. So it has what I would say is sort of appropriate regulations to make sure that it doesn't become a problem for our already stressed grid. There's got to be a plan. They've got to work with the PSC. They also got to be able to shut down immediately if we have storms. The ice storms that we've had in the past have caused problems, and if you have, sometimes it's good to have some of these operations on the grid that is normal everyday operations that can shut down immediately and offer a high percentage of electricity back to the grid. You got witnesses that are coming up that are experts in this field. They can probably give you a much better understanding of that if you want to dive in even deeper. But
We're going to hear from some of those, Representative Williams.
yeah, we were clear to make sure that this would not stress the electrical grid.
Okay, and final follow-up, in reference to the PSC, they're the one that's going to be monitoring this, this
Absolutely.
stress. Okay.
Yes, sir.
All right, thank you, sir.
Thank you for the question.
Very good. I believe Representative Hager has a question for you, Senator.
Actually, not a question. I was going to clarify what 1 megawatt means. That's about the size of a Walmart. That's the size transformer we normally set at Walmart. It's 1,000 kW or 1 megawatt. So you're talking about adding a Walmart-sized load to the grid.
It's always helpful to have those subject matter experts. Thank you for that, Representative. Committee members, we got 4 folks signed up for this bill, and just as a proactive, we have 6 people signed up for the next 2 bills, and we're going to get to all 3 bills today. So thank you for honoring my request. And speakers, we're gonna try to limit your comments to 3 to 4 minutes. I'd like you to if you can keep it tight to 3, but we'll be a little bit liberal, which is difficult for me to even use that word, but I will be this morning, and we'll give you that extra 60 seconds there. So let's jump right in. Ms. Sunny Harmon is going to be our first speaker. Eric, you're on. You're in the batter's box, so be ready, Eric, for next up. But Sunny, thank you for being here this morning, and we'd love to hear from you now.
Good morning, members of the subcommittee. Subcommittee Chairman Smith, thanks for taking this bill up for us. As was previously discussed, this passed 38-1 over on the Senate side, and what S-163 does, I'm with Coinbase, and we are a digital platform exchange for different types of cryptocurrency. And we support this piece of legislation. As has already been said, it really just puts a framework in place. There's no definitions currently in our state code addressing cryptocurrency, blockchain, these various issues that have been brought up just now. Just to jump into some of the questions that I've already heard, because I know there's several other speakers here who are going to speak, and I want to be mindful of that. To get back to the grid question, thank you. What Representative Hager said, these are not like the big data centers that are being discussed over on the Senate side. The data centers that are being discussed over there are the 100 megawatt, 50 megawatt, really huge, big energy users. So to Representative Hager's point, this is a much smaller energy user when you're talking about these data mining centers. But also one key difference as well is these can ramp up or ramp down. So if you've got a major heat wave or you've got a really big cold streak, they can turn off their operations within minutes, so they're not using any energy, and they can plug back in, to use layman terms, when the energy need is not so stressed at that point. So I think Representative Williams, you brought that up. So it's much more flexible than a high-energy typical user that is using that amount of energy consistently. These guys can turn off or they can turn on, depending on what the energy needs are. And then the Public Service Commission, obviously, is going to have full oversight and be able to look at those agreements between the utilities and those centers. So with that, I know we've got several speakers. I also wanted to mention we did work on language prior to introduction with the Banking Association as well as with the Municipal Association. And so they're fine with this language as well. And I know some of those folks are in the room too, but just wanted to bring that up. Anybody have any questions?
Any questions for Sunny at this point? And again, we have 3 subject matter experts coming up, following up with her. I think we're good for now.
Good, cool, thanks.
Thank you very much. Sunny, we may call you back up. Thank you. Thank you for being here. All right, Eric, you're up, and Dennis, you're in the batter's box, sir. Eric, welcome, and the mic is on, and you're ready to go, sir.
Thank you, Chairman Smith, members of the subcommittee. My name's Eric Baker. I'm the Director of Advocacy for Satoshi Action Fund. We're a nonpartisan, nonprofit digital asset advocacy organization, and I'm here in support of S-163. So right now, South Carolina really is at an inflection point. Today, nearly 15% of South Carolinians already own some form of digital asset, including Bitcoin. S-163 ensures our laws protect their financial freedom, and we're appreciative of you taking up this bill today for discussion. Simply put, S-163 establishes a foundational legal framework for blockchain technology in this state, which does not currently exist. It defines these key terms, which future-proofs state code to address digital assets should any issues or questions arise. It protects the rights of individuals and businesses to use digital assets without government prohibition, truly allowing the free market to work. It prevents discriminatory taxation on crypto transactions. It ensures municipalities treat digital miners like any other industry, allowing job creation as well, specifically in high-demand STEM fields. And it explicitly bans central bank digital currencies, or CBDCs, keeping government out of South Carolinians' financial lives. For holders, this bill means legal clarity and equal tax treatment, no new fees, no singled-out charges. For the economy, it opens the door to digital mining jobs while protecting our grid through PSC oversight and curtailment agreements. On consumer protection, it allows the South Carolina Attorney General to seek out any bad actors, keeping South Carolinians safe. Ultimately, it's a pro-growth, common-sense bill that lays the groundwork for future crypto legislation on South Carolinians' terms. I do just briefly want to mention some of the concerns over mining. We've actually seen digital asset mining to be a really powerful tool in grid balancing specifically. We're seeing the rise of renewable energy, of course, and it's not a perfectly efficient system for energy production. So we've seen mining operations actually work in tandem with a lot of these renewable energy providers to balance the grid. They can wind down operations like we saw with Winter Storm Fern to allow the grid to balance out, and it also provides benefits to those energy providers by using energy when demand is lowest, like at night. So it's proven to be a very clear example of balancing the grid. I thank you for your consideration. I stand to take questions at the appropriate time. Thank you, Chairman.
Thank you. I do believe there may be a couple questions
Sure.
for you. So in your understanding of the bill, is there anything that requires any shutdown during peak hours or anything like that, just to address that, to your understanding?
My understanding is that it doesn't require shutdown during peak hours. What I understand it to be is that there would be that PSC oversight in monitoring those curtailment agreements to make sure the grid stays balanced.
Very good. Member, I think Representative Wooten.
Yes.
Thank you, Mr. Chairman. Scott, thank you for being here and helping us explain this. Obviously, most of the folks here, I think I speak for, the concern is on energy and water, right? Our resources. And, you know, you got to remember that some of us, and I'll speak for myself, I grew up in a world that if your brother turned on the hairdryer, and the kitchen lights would dim a little bit. And if you were in the
Right.
shower when somebody flushed the toilet, you're going to get scolded, right? So that's the world I got that I'm relating this to. So if we add digital asset mining, and that's the way it's worded, digital asset mining, isn't that data centers? And if not all of them, or at least some of them, and should they be treated the same? And that's a three-part question, but can you help
Sure.
delve into that a little bit?
No, Representative, it's a fair question, and I understand your perspective where you're coming from. There is a very key difference here. Data centers are designed to operate 24 hours a day, 7 days a week, 365 days a year. The Bitcoin mining operations, we have proven evidence in other states where these Bitcoin mining operations have wound down in order, especially during winter storms or other natural disasters, to help ensure that the grid stays balanced. Because it is a decentralized system for Bitcoin in particular, it doesn't require every mining operation to be operational 100% of the time. So we've seen in my home state of Iowa in particular, we've got a lot of wind energy, solar I know, and hydroelectricity is prevalent here. They've worked in tandem with these energy providers to buy up the excess energy and stranded energy, that we would call curtailment, of course, in order to balance the grid and ensure that these operators get the most bang for their buck, but also they can be responsive to disasters.
So, but I think Representative Smith just asked, nothing requires them to help balance their grid in this bill. Is that correct? It's saying that we would appreciate your help, and we have a mutual understanding that you would help us. But then again, at the end of the day,
Right.
This is about money. If we're talking about making money, and some people are hesitant to maybe make those decisions when their checkbook's on the line, right? So in this bill, nothing would require them currently to power down a little bit to help balance out the grid. Is that correct?
My understanding is that is the case, but of course you have the PSC oversight that could help regulate that as it sees fit.
Are other states that are doing this, do they have that requirement? Are you aware of that?
I think the model that South Carolina sees in this bill is in line with other states where the PSC or PSC-like agency has the ability to help monitor and enforce that.
Okay, thank you very much.
Representative Hager.
I'm just going to say that the grid, of course, I've got a lot of utility experience. The grid is designed for maximum load. That maximum load is a few hours in the morning and a few hours in the evening. Our solar output maximizes in the middle of the day when we don't need the energy. So what he's talking about is they can load up during the middle of the day when the load is dropped, and at night when the load is dropped. The critical times are like 2 hours in the morning and 2 or 3 hours in the evening is when it gets kind of tough. And unfortunately, the solar part of the new energy thing, they're peaked out in the middle of the day when we really don't need it. So it'd be good to get something in the middle of the day load to help balance it would help balance the grid.
That's Representative Wooten with his flat iron. Is that correct, in the morning and the evenings?
Yeah, that's right.
But we don't have to worry about you in the flat iron,
Yes,
Mr.
sir.
Smith.
Representative Williams, I believe you had a question.
Well, thanks to Representative for explaining that much better than I did. That's exactly right.
Hold tight right there, Eric. We got a couple.
Yeah, real quick question. From what I understand, this bill actually set guardrails, and I'm just concerned about how would the federal overreach to come in to kind of mess this up. Do you have any answer?
Thanks for the
regarding that?
question, Representative. May I ask, are you referencing the CBDC prohibition?
Yes.
Yes. It's just been a concept that's been much discussed in Washington and globally, really, that a central bank digital currency could be utilized, which, in our view, could inhibit the freedom of individuals to make transactions as they see fit. We've seen in other parts of the world where something similar has been used to monitor transactions and establish social credit systems. That is the complete antithesis of a decentralized financial environment that we're discussing here with digital assets and Bitcoin. It's a question of freedom versus real deep interest in the personal financial decisions of Americans.
Yeah.
And I choose freedom.
Okay.
Thank you
All
for
right,
that.
thank you.
Representative Chapman.
Thank you, Mr. Chairman. Let's see if I can figure out how to structure this question.
Sure.
So I guess first and foremost, who owns the digital assets mining facilities?
Those would be individual companies that have established the mining operations.
Okay, and how do they create revenue?
Sure. As I mentioned, Bitcoin and other digital assets are built on a decentralized platform that verifies transactions. Essentially, it's large computers using powerful algorithms to verify transactions across the globe. And essentially, these mining operations are competing to verify these transactions the quickest to be rewarded ultimately with a piece of the digital asset. That's why so many of these operations want to scale larger, which is to hopefully earn more reward.
Okay, but how do they acquire that revenue?
Through the blockchain verification process.
All right, so how is that determined what their revenue ends up being?
Sure, that is based on how many of these blocks they're able to confirm, so to speak.
Okay, so the reason why I asked that question
Sure.
is that one of the things that we talked about, like if one of these facilities was going to be in a municipality,
Sure.
then typically you have to have a business license for that municipality. They're in each of the municipalities have different ways of how they structure, but it's usually tied somehow to some revenue. So how is one to determine what that revenue is?
Sure, I would say that would be on the Bitcoin mining company to provide their balance sheet and their proof of concept in terms of their business success, and to work with the municipalities in achieving that business license.
Okay.
Kind of how architects do it?
Well, I guess I'm just trying to figure out if is that something that's readily available so that you can determine, which ones are successful, so that if somebody is considering one of these facilities coming to their area, that's whether or not they would be a successful type venture or not for that particular county or municipality.
I would say that it would be up to the company to make the case that they are successful and the municipality to decide, if they find their argument palatable. We're just trying to codify and ensure that these Bitcoin mining operations, when located in an industrial zoned location in a city, aren't unfairly discriminated against as opposed to any other operation.
Sure, and I appreciate the principle. I was just trying to get a little bit more clarity about how they determine their revenue.
I see.
Not how they determine the revenue for the person who's buying the Bitcoin, but
Right, for the company
for the
who's
company itself that's creating.
doing the
the ability-
mining.
Yes.
Yes.
Okay. All right, thank you. Yes. All right, thank you.
Very good. And just to circle back on some of the earlier comments, this prohibits central bank digital currency, which is basically what China has, where
Right.
they're tracking the citizens. Is that your understanding incorrect?
That's correct, Chairman.
Yeah. Sure. Any other questions? We have thank you for your testimony. And
Thank you.
I want to circle back To Scott. Scott, I'm sorry, you were the first one to sign up to testify, and I was on the wrong page. So, Scott Sternetta, if you want to come forward, I'm sure Dennis doesn't mind. I had you on deck, Dennis. I'm sure you don't mind. I want to adhere to the list as it was. So, Scott, welcome. Thank you for being here, and we appreciate your testimony, sir. And we'll hear three and a half minutes. That'll be great.
Thank you. My name is Scott Stornetta. I serve as, by way of background, I serve as CEO of Shermark Digital Identity Services, and I have worked in emerging digital technologies for more than 30 years. My doctorate from Stanford was actually the first granted by that institution in neural networks, and much of my career has focused on building trustworthy digital system. I'm also widely considered to be the co-inventor of blockchain technology. This is work done at part of the old Bell Labs, Bell Communications Research, many years before the advent of Bitcoin. The data integrity mechanisms that I and Dr. Stuart Haber created undergird all modern cryptocurrencies and protect over $2 trillion worth of digital assets, including U.S. dollar-backed stablecoins. I rise in support of Senate Bill S-163. My support is grounded not in enthusiasm, but in experience. This bill provides something markets and innovators deeply value: clarity and predictability. As digital assets become more integrated into commerce, uncertainty in legal treatment becomes a barrier to responsible economic development. S-163 reduces that uncertainty in a careful and measured way. It ensures that digital asset transactions are not subjected to discriminatory tax or regulatory treatment compared to other lawful forms of payment. It clarifies that the core activities such as mining, operating nodes, and developing blockchain software are not automatically treated as money transmission or as securities transactions under state law. That kind of definitional precision matters. It allows entrepreneurs to build while still preserving the state's ability to regulate fraud and misconduct. Importantly, the bill also reflects prudence. It addresses infrastructure concerns by requiring that mining operations avoid imposing incremental stress on the electrical grid and operate within existing infrastructure constraints, while preserving appropriate oversight. It further empowers the Attorney General to act against fraudulent representations related to digital asset services, a necessary consumer protection safeguard. In short, this legislation does not promote speculation, nor does it remove oversight. It establishes reasonable guardrails while allowing innovation and economic growth to occur within a clear legal framework. For those reasons, I respectfully encourage your favorable consideration of S-163. That's the end of my written prepared testimony. If I might, I'd like to be responsive to the question that the representative here raised about knowing whether the companies are being successful. One of the great benefits of the blockchain, which I had a hand in inventing, is that all of the records of the fees that they generate are public. It's on the blockchain. You can know down to the cent exactly how much money this company, a given mining operation, took in. There is no way for them to hide that information. And so I just add that as a point of clarification. Thank you for your time and consideration.
Frank, thank you very much, and incredible job keeping that at 3 minutes. That was incredible. I know we may have a couple questions for you here. Representative Chapman, further question?
Good, thank you.
All right, very good. Just to clarify, having a subject matter expert as you here before us is a tremendous opportunity for us as a committee. There is nothing, to your understanding, in the South Carolina codes currently that regulate this. Is that correct?
Yes, that's my understanding.
And then any final thoughts on words of wisdom that you would want to bestow upon this committee in terms of where you see South Carolina positioned today and how this could impact us moving forward?
Well, I guess my only comment would be that it's kind of you to consider me a subject matter expert in a particular area. I consider you subject matter experts when it comes to crafting appropriate legislation, appropriate informed oversight, and I would be happy to support gratis any additional concerns that you have, that I can help you do your job of moving South Carolina economically forward while respecting the concerns, some of which are valid, that need to be addressed as part of any innovative move.
Frank, thank you for that. I believe we got a question here. Representative Williams.
Yeah, well, thank you, Scott. Well, I should say Dr. Scott. You certainly, I'm curious, what you have your PhD in?
Physics, actually.
Physics. I had to ask that question. Also, in reference to other states that are surrounding us, are you familiar with, have they led the case on this in other states? Do you know of?
Certainly, I'm aware of very early states such as Wyoming. I know you said around us, but we're all in the 48 contiguous. I have also given testimony in Utah with respect to their regulations. Again, I would say that, quite frankly, what drives this is regulatory clarity, and the bottom line is inexpensive electricity. Now, I'm not suggesting that you have much control over the latter, but regulatory clarity is what entrepreneurs need.
Okay, thank you, sir.
Thank you. We appreciate your testimony, sir. All right, Dennis, you're up, and thank you for being here. And Frank, you're on deck.
Thank you, Mr. Chairman. That is such a hard act to follow. Needless to say. But I want to introduce myself, Mr. Chairman, distinguished committee members. Thank you for the opportunity to testify today. My name is Dennis Vasiliotis. I'm the president and CEO of the South Carolina Emerging Technology Association. We're a 501c6 organization. I'm here today to encourage your support for Senate Bill 163. It protects residents who lawfully hold and use digital assets, and it establishes predictable rules for digital asset infrastructure, including Bitcoin mining. Bitcoin launched in 2009 and begun to find adoption around the world. Mining came afterward as the specialized computing that secures the network and verifies transactions. Since that time, South Carolina has grown its business of Bitcoin miners, and that has spread across the state. We have it in some specific areas, primarily because of rate considerations. 17 years after the creation of Bitcoin, it's time for South Carolina to modernize its rules and remove uncertainty from this business that's here to stay. S-163 provides clarity to Bitcoin mining in a few key ways. Most importantly, the bill prevents discriminatory zoning treatment in areas zoned for industrial use, where you would put noisy types of businesses like factories. Local governments may not single out a digital asset mining business in that particular configuration, if you will. This means restrictions on sound limits that are in place apply to Bitcoin miners. We're not looking for any special consideration by any means, but they cannot be changed to only single out these types of businesses. And we've seen that in other parts of the country. If they are in a Bitcoin miner can appeal such a zoning change. Additionally, the bill reinforces grid responsibility and transparency. A mining business drawing more than 1 megawatt must operate in a manner that does not place additional stress on the electrical grid. This is possible because Bitcoin miners can reduce their energy usage, as we've heard, almost immediately compared to traditional data centers or other loads, large loads like factories. Upon request, a Bitcoin miner must provide its power purchase agreement to the Public Service Commission, demonstrating it can reduce power consumption during periods of grid stress. This was added to the legislation last year to address any concerns about power usage. The South Carolina Emerging Technology Association believes this legislation, as it relates to mining, will increase economic development, especially in rural parts of South Carolina. Outside of the mining portions, We also fully support the bill, including protections for self-custody, lawful transactions, tax parity, and the prohibition on state and local participation in central bank digital currency payments or tests. This bill does not ask for tax credits or special incentives. It sets clear enforceable rules for the businesses already here and for those considering locating here. I respectfully ask for your favorable vote, and I'm happy to answer any questions.
1 second left. Incredible. Nice job there, sir. Thank you very much. One thing that comes to mind that I've heard as well, is it true that potentially some of the future issues could include legislation that would need to be addressed to address unclaimed properties in the form of cryptocurrency at the Treasurer's Office with and how to better protect consumers at Bitcoin ATMs? Are those some of the issues down the road we would need to be addressing as well, in your expert opinion, knowing that you also are a subject matter expert in this as well?
Yeah, not under this bill specifically. Those are separate bills. Obviously, the Treasurer's Office, as the custodian of abandoned property, part of that consideration is, currently if they have Bitcoin or some other digital asset, that's abandoned, they have to convert it to cash, and that's how they hold it. So, the Treasurer's Office is considering how, and they actually participated in a test, several years ago with New York Bank Mellon, if I recall correctly, so that they can custody Bitcoin and digital assets in their native format and hold it in that manner. As far as the ATM matters are concerned, my understanding of that bill, and I only kind of touched on it, that's more of a regulatory side, as a consumer awareness project. I mean, it's not the ATMs that cause the problem. It's the scammers. It's the hackers. It's the folks that are telling you to go to your ATM, go to your bank, get your money out, put it in the ATM, and send us Bitcoin.
That's right.
And there are lots of safeguards. We've had members in the past that, the level of just recognizing that is a problem, the vendors are well aware of that,
Yeah.
needless to say.
And
But-
again, those are outside the scope of this bill. Just wanted,
Yeah.
while you were there, I had to tap into that knowledge
Yeah,
that you
sure.
bring us. And I think we have another question, Representative Brewer.
Thank you very much, Mr. Distinguished Chairman. Do we have currently any miners operating in South Carolina?
Yes, sir.
Are they beholden to any rules right now, or are they just kind of operating on their own?
Well, they're operating under local ordinances, obviously zoning requirements. We have a concentration of mining up in the Piedmont area, in the Greenville-Spartanburg corridor, primarily in the Pacolet area. Some of the co-ops still have mining, Newberry specifically. We are, because of our tariff issues, quite frankly, these data centers, and I'm going to use that in a loose term because our definition in South Carolina as data center is much more restrictive than what we see right now. It's design specific. We have really the opportunity right now, I think, to look at this and say, because of the interruptible load as a large load customer, the ability to shut down very quickly, provide that energy back to the grid, has been, it's been tested and proven. During Winter Storm Elliott, as an example, if you look at the operating areas with the utility company that provides a lot of generation in North Carolina and upper South Carolina, we had during Winter Storm Elliott, we had rolling blackouts in the Raleigh-Durham and Charlotte area. A lot of their stranded resources were converted to the big box, the hyperscalers, if you will. And we use the terms Tier 3 and Tier 4 based on the amount of efficiency that they're using or the amount of uptime that they have to have. Bitcoin mining falls into the Tier 1, Tier 2 category, a lower threshold, but they could actually operate on about a 92% uptime. So that gives them the opportunity to shut down literally 30 days out of the year, and provide that energy back to the grid, whether it's 10 minutes one day or 5 hours another day, whatever the case may be. And that was the case during Winter Storm Elliott. That's what saved the Piedmont area from the blackout.
Thank you for that.
Yeah, I think one of the things that we need to really pay attention to is currently they're operating and there are no guardrails.
That's right.
This is bringing some guardrails to it and hopefully refining the process a little bit.
Thank you for that. Great point, Representative Brewer. Great point. Thank you for your testimony. We
Sure,
appreciate
and
it
I
very
will
much.
add, I'm in the process of a field trip for the law school up to the Newberry area in late March. If any of the representatives would be interested in joining us for that, I'd be happy to.
Very good. Thank you.
Extend the
Just let us
invitation.
know that invitation. Thank you for that. Frank, you're up next, and you're going to wind us down here. So Frank, we saved the best for last, sir.
I appreciate you having me. Members of the subcommittee, Chairman Smith, thanks for allowing us to speak here today. I am the CEO of a company called Metafied, and what we do is we have a global competition of users with AI, and they predict asset prices. It runs on blockchain, and it's an example. I'm here basically as an example of companies like mine. There are hundreds of them that are looking for regulatory clarity so we can find a home. There's billions to trillions of dollars out there looking to innovate and build these kind of financial products, predictive asset derivatives, and things like that. And it needs a place to go, right? So the first point is, the state has a chance here to attract and onshore companies that left during a time when regulatory schemes were either hostile or unclear. So you can bring that to the state, and it could benefit the citizens quite a bit. I'm not particularly focused on the grid or energy policy because the things that I'm talking about don't augment or add load. The other thing that I would like to point out is the state has a chance to do what it does best, which is protect the property rights of the citizens in a way that lead the nation and the world. And by doing this, you're saying the citizens of the state own their property, they own their work product. The government can't turn them off from economic participation because they said the wrong thing or asked the wrong question, backed the wrong candidate. And that may seem far off, but it's not. You have a chance here to safeguard the citizens of the state in a way that will be monumentally important in the future. And I appreciate your time. I'm willing to take any questions.
Thank you very much for testimony. Any further questions at this time? I think we're good at this point.
Thank you.
Thank you very much. Members, any final comments from anyone, or is there a motion, pleasure?
Mr.
On the
Chairman,
floor?
in light of all of this, and we have listened to everyone, and seems like everybody's on board out there. One time they're all together. So I'd like to make a motion that we approve this and pass it on to our full committee.
Thank you, Representative Anderson. We had a motion. We have a second. We got a second. Thank you, Representative Hager, on that. Any further discussion? All in favor signify by saying aye and raising your right hand. Let the records reflect that was unanimous, so there's none opposed. Thank you very much, and we appreciate all of your time coming after this testimony, and this bill now moves to full committee. Thank you very much, and I do believe that full committee hearing is scheduled for later this week. We're going to, you're aware of that, and Thursday morning is that. So thank you for that. Let's move right along to our next two items on the agenda. That's House Bill 4613, and I'm going to go ahead and say House Bill 4614. Those were both filed by our very own Representative Aremus, who's here with us this morning. Representative Aremus, thank you for being here. And folks who've signed up to testify are going to be speaking have signed up for both bills. So when I call your name after we have a little brief discussion here amongst the committee members, just when you come up, identify yourselves, of course, but just let us know which bill you're speaking to, if it's particularly related to one of the bills or if it's just related to both bills. One other brief thing, we do have, want to make sure we put this on the record. We have a letter of opposition from the Electronic Payments Coalition. Members, that's on your directories there. And we also have another letter of opposition from the Card Coalition as well. And so organizations do know that those letters were received, and all members have had an opportunity to read those as well. Representative Remus, I recognize you to speak on, if you'd like to do an overview of both, however you'd like to handle that. We appreciate you being here.
It's totally fine. You can either one. But thank you so much for hearing the testimony on these bills today. As a small business owner, where I've been a merchant and this situation's been affected by it, and I've been in banking for over 10 years in my past life as well. So I've kind of seen it from all sides. Basically, this first bill, 4613, stops credit card companies from charging swipe fees on the sales tax portion. We are required by law to collect the sales tax and send it into the into the government, why should we as merchants also have to pay for fees to do that? So it's kind of stopping that process. Illinois has passed this legislation, so I look forward to hearing the experts on this.
Very good. Members, any comments on these before we do have some folks here to testify? Let me just do a quick glance here.
Oh, and let me make add, I'll just do a quick for 4614. When you're in a dispute period with a credit card company, just trying to stop you from getting more fees, accumulated on that. Everybody knows how important every dollar is to them, and giving any extra out at the time is what we're trying to prevent here.
Very good. Thank you for that, Ms. Representative Remus. And again, this is House Bill 4613, which is a sales tax swipe fee, Fairness Act. And then again, for the records, House Bill 4614, Chargeback Fairness Transparency Act, both related to the same thing. Two separate bills, of course, though. So we have 6 speakers, committee members signed up to speak. And as was the case earlier, thank you all for being here. And we'll call each of you up, and you'll have 3 minutes to speak on that. And I do believe we have some committee members that want to speak before we hear from our presenters. So, Representative Anderson.
Thank you, Mr. Chairman. Representative Remus, you just said a minute ago about the swipe that you're charged, you pay the tax, and then you're charged again?
For instance, let's say everybody that is a merchant who sells products and services have to collect the sales tax on that. Right. So when that happens, your sales tax is calculated just based off the percentage. So just say if I had $1 million in sales, and we're looking at just say 7% sales tax, that's $70,000 a year, and then take 2.5% a swipe fee, and then I have to take a percentage of that. That's roughly about $1,800 that I have to send to the government just for processing the fee that I have to pay them anyway. And so that's just putting money back into the small business owner's hands, saying, I can't help that I have to collect this money is required by law, so I shouldn't be having to pay a fee on that as well.
So is that why when you go someplace now and you swipe your card, they add a percentage to it?
Well, there's all kind of hidden fees. Do we ever know what any of those fees are? But it's not costing them any more money. When we swipe that card, that's the transaction. How they itemize that and where the money goes doesn't change how much that costs to make that swipe fee. It's a fee, basically, a fee to be a fee.
So 4613 would eliminate that?
It would stop you from having to pay that percentage, yes.
Me as a consumer?
As the merchant who has to send in their sales tax to the government each month for that portion that we have to do. We have to collect it, and we have to send it in.
But it helps you as the merchant, but what about me as the consumer?
You as a consumer, you're not really, you're going to pay that same thing. You don't know the fees. You're the other side of it. The consumer itself, you don't know. It's the small business that's affected. That's collecting the sales tax.
Let me hear some folks. You still didn't answer my question.
Representative Anderson, we appreciate your question, sir, but you, like all of us, are still going to be paying your sales tax fees, sir. Nice try, but you're going to pay your fee. It's the merchant fees that we're talking about. It'll click in just a moment, I'm quite sure of it. Any other questions from the committee members? Okay, let's jump right in. We have Ken Glasson speaking, and Krista Henson, you're on deck. So, Ken, welcome. The microphone is turned on, sir, and you got 3 minutes.
Thank you, Mr. Chairman and ladies and gentlemen of the subcommittee. I appreciate, as a former elected official in Mount Pleasant with Mr. Smith, I can attest that you do this because you love your state, and I do really appreciate that. My name is Ken Glasson. I'm a retired Marine Lieutenant Colonel and owner of a company called Semper Aegis Mercatus, which is actually Latin. It means always protecting the merchant. It's a point-of-sale and credit card processing firm based in Beaufort, South Carolina. And although I don't have a PhD in physics, and I feel a little undereducated, I have just a master's degree in business administration with a concentration in accounting and finance. So I'm kind of a numbers nerd of sorts. And I'm going to be speaking in favor of, in our phone call that we had in the bill that's been proposed on the taxes exercised into a credit card processing fee. And as it affects and I'll address that as it affects, right now the state is set up, and I've prepared, do you have a packet there? I prepared packets because I can't in 3 minutes speak to what would take an hour to go through in really detail. But the state has
will you grab those? Thank you. Continue. She'll get those for you.
Thank you. The state currently has a law that 12-36- 910 Alpha, which talks about the gross proceeds of a sale and adding the credit card fee as a taxable entity on the overall bill. And I believe, as do many states do, and the representative indicated that Missouri has just passed, as well as 18 other states have passed, that they now have eliminated this sales tax on the credit card fee. It's not one blanket size fits all. And when you look at the different confusing at best manners in which is presented, there's a cash discounting, there's a dual pricing, there's surcharging, interchange plus, convenience fee, cash adjust or non-cash adjustment, or a service fee. All seem to fall under the same blanket, but they're completely different depending on how they're applied to a business, how the differences are batched either daily or monthly, how the sales tax law code actually prohibits some of this, and then you get into non-tangible service fees. All of those add into that this needs to be dissected and approved, because as you blanket it across, you actually void state law, your own state law. In some instances, the merchants never receive the credit card fee. It's withheld on what's called a daily batch. It goes directly to the processor. And in every single situation, and I'll cover this in a minute, 100% of every single dollar has a credit card fee attached to it, whether the merchant absorbs it through an interchange plus or is passed through one of those fees that I mentioned. You have certain carve-outs of doctors, accountants, hairstylists that don't have that code. And I believe that this falls under, which a statute should be built, that falls under that same alignment. When you have a convenience fee or a non-cash adjustment, they're not credit card fees. That's a fee that the merchant uses to offset the credit card fee. But the actual credit card fee comes at the end, and the taxes are always included above it. So if you are going to write a credit card fee and tax it, you are taxing the tax. And when you get audited, you're taxed, and that's another whole issue, but you can't avoid that. And when I sat with the National Restaurant Association, and that's in that packet, their information, they stand behind. You can't. I don't know how you can. And I'm a numbers nerd. I just don't see how you can charge a sales tax on a sales tax despite the gross proceeds. So the bottom line, it comes down to the credit card processing fee is a third-party pass-through fee. It's not received, retained, or controlled by the merchant. It is imposed by the credit card processor, whether it's through a what's called cash discounting or it's through a interchange plus where the merchant absorbs it. It is separately stated on the bill. It is well, we'll skip that one. It's added to the sale at the end of a finalized bill, and it's not considered the personal tangible property that is listed out in our state code. Sorry, I was 10 seconds over.
No worries. Committee members, what questions do you have for Mr. Glasson? Mr. Williams, you're recognized.
Thank you, sir. And certainly this can be confusing. But these processing, evidently, do they pay taxes on the processing fee?
My income is derived of that, sir. I paid, I don't want to tell you how much, but a lot of money to the federal government and the state last year for the credit card processing fees that my firm takes from the merchant in order to allow them to process credit cards. So it is taxable. It is just not taxable, in my opinion, or in the 18 states that have changed their legislation to not include it. It's not a sales tax. It is a taxable entity that either the merchant absorbs and writes off in their income tax, or they pass it to the end user, and that gets pulled out. So in other words, in the example of $100 going into, or as charged in a 7% sales tax, 107 is collected by the merchant. That credit card fee of an additional $3.21 on that scenario of a 3% credit card fee would place that $3.21 extracted. They never see it. And that's held by what's called a TPA, a third-party administrator. Then at the end of the month when that bill is due, we pay the bill and keep the difference, which is how we make money, and I pay income tax on that. Did I answer your question or confuse it more?
You did, certainly. But there are some hidden fees, it sounds, also that consumers actually, because I know when I swap my card, there are some fees on that card that and I'm thinking that it going to the POS, the processors, those guys who make the transaction and it go to the processors. It don't go to the processors. What you're saying now, it goes back to the.
No, sir. The credit card fees go to the credit card company. So in other words, and it's as muckety can be, and as far as being confusing, I think the industry does it on purpose. Because when you take the difference between Interchange Plus, which means that whatever Visa, MasterCard, Discover, and American Express charge you, then we take a small markup on top of that. That is absorbed in that same scenario of the $107 transaction that includes the sales tax. The merchant would have deducted out that $3.21 and only get $103 back. When they pass the fee to the client, that's a $110 charge off the $107 transaction, and that $3.21 is still held, but the merchant gets all of the sales tax and all of the purchase price of that item, and then they get to retain 100% of that instead of having that as an offset. So they're passing the fee on to you, and there's legal ways to do that. You'll see companies that'll put a non-cash adjustment or convenience fee. That goes above the sales tax, and that should be taxed. Just like if I'm going to a resort, they have a resort fee. Well, that's above the sales tax line, very simple, very clear, very straightforward, and they should have that ability to tax, the state meaning. But when you get into a credit card fee, because that's not the credit card fee, that's what the independent company is using to offset those fees. And when they try and offset them, that money is taken from them on top of that. Does that make sense?
Yeah, it makes sense, and certainly it just a lot of schism in it, because, I know that when I look at my swap and I get all these fees charged against my card, I don't know where they're going. I'll be honest with you, don't know who's receiving them. All I know that at the end of the day, I'm paying $3.50 for somebody to get, and I don't know where it's going. So.
Yes, sir.
I get it. I don't know how we're going to tackle it.
If we go down a deeper rabbit hole, the lobbyists that the Visa, MasterCard, American Express industry have hold on to that, because there's fees that are literally, I've sat with Governor Haley back in the day and said, ma'am, we need to change this. In other words, I can, as a business owner, I can put a line item in there on the credit card statement that says business area location fee, the Beaufort, South Carolina transitional fee. It's literally a made-up fee that you are required to pay, and they get the money for it, and fabricating what that fee actually is.
Right.
But on the actual credit card fee is a fee that in most cases, I've got about 300 clients, and I have maybe 4 or 5 that don't pass the fee. And none of those clients see that money.
Right.
When I do a $100 transaction, $107 is charged to the card with the added taxes. The merchant sees it as $110, signs off on it. That $3.21 goes into my bank account.
Right.
So you're holding a merchant responsible for paying sales tax on something they never see or don't have control over. It's a direct pass-through. And the law is very clear on the rules from Visa, MasterCard. You cannot make money on credit card processing. So if someone adds a higher fee, that's when the state comes down and really lowers the hammer on them, and rightly so.
Yeah, and I get it because, I think that when you use your debit card, it should be like cash. I don't know,
Yes, sir, that would be surcharging.
Yeah.
And again, let's add more convoluted mess to it. If you use a credit card, that gets charged on surcharging, and then you absorb the fee on a debit card, because a debit card has a much lower threshold. Normally, it's what's called a basis point, 50 basis points. My favorite, of course, as a Marine, is Navy Federal Credit Union. It has the lowest fees. So that 3% gets reduced down to 50 basis points, basically 50 cents on a $100 bill. Where a credit card, the rewards cards, how they get away with this, I don't know. But when I pull out my rewards card, the merchant gets charged 2.5 points just for me using the card that they pay back to me in points, so I can go fly to Tahiti on your back.
Yeah.
I have no idea how that's legal, but then again, I don't have the gazillion dollars.
I'm still trying to
$4 million an hour they make.
I'm still trying to follow the rabbit trail, and evidently it's a rabbit trail.
Well, that packet lists it out, sir. Happy to come back. I've known Mr. Smith for 25 years, and I can go mooch a place to sleep if I need to. My daughter lives down the street. Happy to come back and just go into it in detail so everyone understands the mess that is created with this and what the rules really should be to clamp down on businesses that are making money on credit card processing.
So really, it kind of forced you to pay it in cash so you don't have to pay all these hidden fees.
Yes, sir.
Pretty much.
As a credit card processor, I know my clients wouldn't like this, but I'm a cash guy.
Yeah.
Because it's a 3% fee
Sure.
pretty much wherever you go.
Sure. You know what you're paying. You know what you're getting
Yes,
for
sir.
what you paid for.
Yes, sir.
All right. Thank you, sir.
Representative Anderson.
Mr. Chairman and members, let us all bear in mind that we have 20 minutes before session will begin, and we passed that we cannot go beyond session time. So we got 5 more.
Thank you. Yes, sir. Thank you very much. Representative
Thank you
Williams,
for
I don't
politely
believe that
telling
was
me I talk too
indirectly
much.
remarked to you. I don't believe he was talking to you indirectly. Yeah. Thank you for your testimony, Mr. Glassman. We appreciate you being here. Let's
sir. Ladies
let's
and
go to the
gentlemen.
other side of the argument here and hear from Christy Elber. Please, Christy, come on up, and then Krista Henson, you'll be on deck. Sorry, we're going to go back and forth. So this is Christy. Thank you very much for being here this morning.
Thank you very much, Chairman. Again, my name is Christy Ellerby, and I'm here to represent the Electronic Transactions Association, better known as ETA. Our members include payment networks, banks, processors, fintech companies, and technology providers that enable secure, reliable electronic payments for businesses and consumers across South Carolina and the country. HB 4613 would impose a state mandate that fundamentally alters how electronic payments are processed, harming banks, credit unions, small businesses, and the citizens of South Carolina. But before I get into more of the problems that we see with the bill, I would like to briefly highlight what the payments industry already contributes to South Carolina and why this matters for the state's economy. According to an independent study recently done by PwC in partnership with ETA, it showed that the payments industry is a significant and positive economic driver in South Carolina. For example, we support 22,500 jobs here in your state. The industry generates $1.7 billion in total labor income and contributes $2.7 billion annually to South Carolina in the GDP. What we offer here are high-quality jobs to your citizens and families and communities across the state, and just as importantly, the payments ecosystem enables commerce across South Carolina's economy, from retail, hospitality to healthcare, manufacturing, and professional services. We believe that this bill puts the economic contribution, hurts it by disrupting the digital payments infrastructure that South Carolina has come to know. This bill mandates a system that does not exist today, and the payment system does not distinguish between a tax dollar and a purchase dollar. Interchange applies to the entire transaction because it funds the infrastructure, security, fraud prevention, and reliability that electronic payments become possible. By carving out just a portion of this transaction through state law, it would force payment networks, processors, banks, and merchants to redesign how transactions are processed, reconciled, audited, and settled, effectively creating a South Carolina-specific payments framework separate from the national and global system. We believe that this bill is bad for businesses, and especially for a small business that relies on secure payment acceptance, fraud detection and protection, faster checkout and higher sales, rapid access to funds. We believe that you have heard and you may hear that sometimes the interchange has increased. But please hear me, interchange rates have consistently stayed the same since around 2016. However, during that time, we all know that we went through COVID and an adjustment in how we pay for things. And during that time period, the volume in sales increased while that percentage level stayed the same. So in a way, you could say that the payment industry has actually been very beneficial to small businesses and larger businesses as well, making them much more successful. Currently, the only state, I believe the 18 states that were mentioned before were more based on a surcharge fee, not on interchange, because right now the only state to pass similar interchange mandate is the state of Illinois, which the result has been costly litigation, and it's pending now with an appeal in the Seventh Circuit. The courts even described the law as indisruptively disruptive. In closing, I would just like to say that South Carolina should not voluntarily become the next legal and operational test case in this study.
Christy, thank you so very much. Members, for your testimony. Members, what questions do we have at this time for Christy? All right, very good. We'll continue on. Thank you so much.
Thank you again, and I'm happy to come back at another time.
Absolutely, that'd be wonderful. And while Krista is coming up, Krista Henson, I do want to make an announcement to Patrick Gleason. Your email to the committee in opposition of this bill, sir, was received, and we all have a copy of your email. So thank you for that. Krista, we'll turn it back over to you, and you're here to speak in favor of the bill.
Yes.
Thank
yes.
you.
Thank you. Good morning, Mr. Chairman, members of the committee. I'm Krista Henson. I'm the Executive Director of the South Carolina Retail Association. In that role, I represent retailers of all types and sizes across the state, and the industry of retail supports 1 in every 4 jobs in the state. I want to start by thanking you all for allowing me to speak here today, and especially thank you, Representative Arimas, for bringing these bills up for consideration. I'm in favor of both House Bill 4613 and 4614. I will spend most of my time, though, speaking on the swipe fees bill, 4613. Generally, and we've heard a lot, obviously, there's a lot of confusing things out there about how this operates, but generally, swipe fees add more than $1,200 in cost per family, per household, per year. Some of that is not addressed by this bill. That there are bills in Congress where they are debating monopolies, duopolies, that sort of thing, trying to increase competition in the payment processing market. But something that states can do, and Illinois has done, and other states are considering, is the portion on the sales tax portion of the transaction. So as Representative Arimas mentioned earlier, in a $100 transaction, the retailer is collecting sales tax on behalf of the state. We are the state's sales tax collector in that regard, and we're currently being penalized for that role by having to pay that credit card processing fee on that portion of the sales tax for the transaction that we don't keep. We remit that to the state for tax, but we do have to pay those charges. Representative Anderson and Representative Williams, to your questions earlier, some do add surcharges to help them recoup some of that, and that is legal up to a certain percent. Often that percentage that's allowed in South Carolina to recoup those credit card surcharges does not fully make them whole for the charges that they're paying, the merchant is paying to the credit card companies for processing. So this bill would simply say that on the sales tax portion only of the transaction, not getting rid of swipe fees entirely, but on that portion, there would not be a swipe fee charged. And according to recent reports on swipe fees, South Carolina businesses paid more than $133 million in fees on the sales tax portion of transactions in 2024, which is up almost $50 million from what they paid on the sales tax portion interchange fees in 2022. So these numbers are rising, and they're increased costs on businesses that we're distributing mostly to out-of-state big banks or credit card processing companies instead of money that our businesses can reinvest in our communities and in our economy and in keeping prices low for you all or not having to pass those fees along. So I would respectfully ask that you all continue conversations on this. I know today is testimony only, but it's a very big deal to our businesses across the state. And as those conversations keep moving, we would ask at the appropriate time that there be consideration to options for how merchants are to do this, whether it be in real time or like the Illinois law would allow, they could submit documentation regarding those fees and the sales tax portion of those transactions for credits or reimbursements at a later date. So I thank you again and appreciate your time. I'm glad to answer any questions.
Thank you. Perfect timing on that. I do believe we have Representative Chapman with a question.
Just a quick question. Would you say the credit card industry as a whole is increasing? Is people using credit cards increasing or decreasing?
Increasing.
Substantially?
It would seem that we see a lot more year-over-year use of digital payments versus cash, yes.
Okay, good. So typically, in most businesses, when you have economy of scale, your cost goes down, correct?
Usually, yeah.
Okay.
Unless if it's an incremental cost, scale makes it bigger. If you can use volume to get discounted, then it would go down, yes.
Okay, thank you.
Thank you, Representative. And just a follow-up question on that, Representative Chapman. So in your own personal business, have you seen credit card usage increase in your business?
So when we had the interior side of our business, we would accept credit cards. When we went to service only, most clients pay with a check or a bank deposit.
Got it. No bartering, no chickens or anything like that?
No, no.
Very good, thank you. Any further questions for Krista at this point? Thank you for your testimony.
Thank you.
Members and audience, we have 2 more speakers, and looking at the time, we're going to be able to get to everyone who's signed up. Thank you all. Neil, if you want to make your way up to the podium, and Michael, you're on deck, and Gentlemen, you have 3 minutes, and it appears the microphone is already on for you, sir, and the floor is yours.
Thank you, Mr. Chairman. Neil Rashley, General Counsel of the Bankers Association. I'm going to try just to hit some main high points. This is testimony only. Certainly, I'm free, and you know me, to talk about these issues anytime you'd like to talk about this. I'm here on behalf of the banking system, the depository banks in South Carolina, including the small community banks. I want to make clear about how banks are involved in this and what kind of fees we're really talking about. When a merchant pays what is called a merchant discount fee, and all of that is divided out a small, very cents to the card company, for the card company, a small cents to the acquiring bank, which is the merchant's bank, and then there's a good bit what's called the interchange fee. That's what this bill is about, and that's what goes to the bank, okay? I want to be clear about that because Mr. Anderson and Mr. Williams, yeah, there are a lot of mentions of fees out there. It can seem confusing, but I'm trying to walk through just a little bit of it. First off, the interchange fee is not pure profit to the bank at all. It is a revenue stream to provide the services that banks provide that are directly tied to checking, debit cards, and credit cards that banks issue. Okay? It helps pay for fraud prevention. It helps pay for operational costs. In other words, it does exactly what any business does. It takes a revenue stream and directly ties it to the cost of providing that good and service to the customer. Now, we sit there and we look at this tax versus the actual purchase of the good. And the example's been used, the $100 purchase with a presumption of a 7% sales tax, okay? So that's $107. When you purchase that, when I purchase that at any retailer, that is $107 that goes through to the banking system. That $107 totally is what the bank has to bear a fraud risk on, what it has to bear an operational cost on. So what bills like this would do is, it is essentially taking government and saying that notwithstanding the cost that you as a private business have to bear in fraud risk and operational cost, this part, we're not going to let you be able to apply that. What happens in any kind of business is that when government puts a pressure on a revenue stream on one side, it's going to push out the cost on the operational side. It's as simple as that. We've got a very clear example of that in this issue here. In 2010, Congress passed the Dodd-Frank Act, which capped debit card fees, not credit card, but debit card fees, capped them considerably lower than what they are now. What happened since? Community banks, even though they were exempted from the bill, market pressures of pricing pushed down to community banks, and they lost 30% of their revenue in debit card interchange. What happened there? Free checking is gone. Checking fees have increased. Banks are doing exactly what any business does. If there's a pressure on your revenue on one side, it's going to cause an increase on cost on the other side. Now, as far as this surcharge is concerned, I get these things too. When I go to, say, a restaurant or somewhere, you see this surcharge. Okay, first, surcharge is going to be done on credit cards, not debit cards. So let's be clear on that. The retailer chooses to apply the surcharge. That is not a credit card charge. That is not a banking charge. I would like to offer one thing real quick, Mr. Chairman. Vendors' compensation. Retailers are able to be compensated on remitting sales tax. I would suggest looking at that as a way to possibly increase in order to do that. I'm not even talking about 4614 yet. I'm going to go at the will of the chairman about what you'd like me to talk about, and I'm here if you want me to get back up or talk later.
Very good. Thank you for your testimony. And looking at the time, I would like to yield the microphone to our next speaker, Michael, so he gets his 3 minutes. You've been very diligent in waiting today. So, before you start speaking there, Neil, just want to confirm, I heard you say, of course, you'll make yourself available for any further questions the committee has. They can always come to you directly on that as well, right?
I'm here all the time. You can find me when you need.
Thank you very much. Yeah, so these previous testimony and this next testimony is against the bill. Thank you very much. And Michael, 3 minutes. We'd love to hear from you, sir. Take it away.
Thank you, Mr. Chairman. Thank you, committee members. We appreciate your time. Definitely speaking against the removal of swipe fees on the taxation. And I can say simply, we agree with the bankers on this. I'm Michael Beam. I'm with Palmetto Citizens Federal Credit Union. We've been in business since 1936 in Columbia, South Carolina. We serve about 86,000 members throughout the state. And I've been there for quite a long time. I personally think that the swipe fees, also known as interchange fees, they're really a win-win-win for everybody involved. They're a win for us, because as Neil mentioned, that there are certainly costs associated with operating credit cards, definitely building a cybersecurity platform, definitely dealing with the fraud, dealing with member disputes, and then just the day-to-day operating cost. From a consumer standpoint, not only do they benefit by having rewards programs that are paid for through those same interchange fees, but they also benefit just by general commerce. Can you imagine trying to make an online transaction of any sort without a credit card at this point? You'd be writing a check and promising to pay, and that would be a mess. And so even, if the costs are not going to go down while the income might not. So that it is a matter of how does that get redistributed in the long run. As far as the win from the merchant side, they probably don't recall. Again, I think swipe fees get a bad reputation. But, I've been in the business for 40 years, and I remember going down to the magistrate's office when merchants would walk in with hundreds of checks, and they'd sit there and try to collect all those checks. When merchants had to deal with loads of cash, they not only had to keep cash in their cash register, they had to keep security for that cash. They had to pay delivery fees and so forth. So it really has been a great thing for commerce. I think we have close to 96,000 cards between debit and credit that are out there right now. All those are helping merchants day in, day out, and it's also helping them to avoid the cost. So definitely won't take much more of your time. I do think it's even a win for, I think, the government, because I think, cash, the more cash there is in a society, the less traceable it is. And credit card and debit cards are definitely traceable. But I'd be happy to entertain any questions.
Members, we got a minute or two left. Any last-minute questions for Michael or Neil previously? Looks like we're all set at this point, and thank you very much for your testimony, and obviously for follow-up questions, you'll make yourself available as well.
Absolutely.
Very good. Members, at this point, we're adjourned.